What a wonderful panel to be speaking with here today. And I think just over lunch we were actually talking about, to Holly's point, around the 10% month-on-month growth. That's a really important point to make here, because when we talk about the definition of startups, certainly at Startup Victoria, we take that to mean a high growth business. So that's not a lifestyle business. It's a business that the best way we can describe it is a business that's growing 10% month on month, and that's something that I guess that Sarah embodies. So I guess I'm keen to know who in the room has raised or is in the process of thinking about raising finance for their own business. Hands up. Okay, a few. Great. Did you put your hand up as well?
Yes, because we're raising a fund and we'd love
Fantastic.
to
Okay, if there's any investors in the room here today, come and chat with Laura. So look, the Office of the Chief Economist put out a report that showed 25% of startups seek finance in any given year. But how that breaks down is pretty interesting. So something like 22% of that was debt financing, i.e. going to a bank. And that might be, cash flow financing, drafts or overdrafts, or it might be a loan. But only 7.4% sought equity finance, and these are the things that I guess these two wonderful ladies here are probably experts in. And interestingly enough, the success rate of startups that are applying for this equity-based financing has actually decreased in Australia over the last 10 or so years. So it's gone from 3% to 1%. And then if you think and break down that 1% into 5% of those female-founded startups, you're talking about an extremely competitive marketplace. So I guess where I want to start is just a really broad question, and maybe we'll start with you, Laura, and then move on down the line. How difficult is financing of this type for startups, and how much more difficult, and in what ways is it more difficult for women?
It's absolutely challenging for any entrepreneur. And just to go back to some statistics that Jim gave when he was on stage earlier today, and I think he said 15 of the 800 entrepreneurs he'd spoken to over the last few years were women. Well, at scale, we've spoken to about 650 female founders. And we've invited a number of those to come to screening and to our investor forums, and we've invested in 8. So that's quite a small percentage, and that's pretty reflective of what the fallout rate, if you like, would be on a global scale. So it is tough. You will have to pitch to lots of people. In a way, I feel a little bit like a matchmaker, because it's so important for an entrepreneur to find the right investor.
Can I ask a question? In terms of that fallout rate, is that the same with male and females, or is that fallout rate just that they've done research on in terms of females?
So we very much focus on female entrepreneurs, so those are our statistics. Yep. But industry-wide, to invest in about 1 or 2% of deals that you've seen is pretty common, and I'm not sure how that breaks down across genders.
So I raised money as a female CEO in Silicon Valley. I started a company, and I was part of a group called Forum for Women Entrepreneurs, and that helped. When I think of the success we had with our company, so much of it came from the network that I made through the Forum for Women Entrepreneurs. And it was so powerful that my co-founder, who was a guy, said, "Why isn't there a forum for men entrepreneurs? This isn't fair." But that company, Seven Software, the procurement company, ended up, we had a successful exit. We merged with Concur and went public on the NASDAQ. And then I became a venture capitalist in '99. And we were hardly ever pitched to by women. So it is very hard to get this type of funding. It's maybe 1 out of 100 companies that we actually met with in person, we funded. But it was probably fewer than, and I didn't ever calculate it, but I can kind of count on 2 hands, in the 10 years, the number of times that women pitched to us. So women weren't asking for this type of funding. And when they did, what I noticed was, one of my partners was a woman, which is really rare, but we'd come out of the meeting and say, they're just not as good at guys as pitching. They're not as good. And the reason we thought they weren't as good is because we as women who'd been successful entrepreneurs, we had this bias on what a good pitch looks like. And what a good pitch looks like is how a guy typically pitches. So it just was something we didn't see enough of. And we have to see it more. So one of the reasons we started Heads Over Heels was to help women get networked and help them not so much learn different ways of pitching, but just get more people out there pitching for funding, so the norm isn't just this one norm, and the norm becomes broader.
So just talking about, and I think this has been something that's been touched on earlier today around, do we fit women into the male paradigm, or do we create something new? And to your point, you had this kind of unconscious and then conscious bias around what a good pitch looks like. Do you think that there's room to challenge that kind of, all right, you've got your 10-deck slide and it's got to have this and that, it's got to have your product and then your pricing and then, what kind of room is there for that? Or do you think that that's still an important structure for a pitch?
I still think you need the 10-deck slide, or you need to answer the basic questions. But in my 30s, I thought women just need to be more like men. And now I think that men just need to be more like women. In my 40s, I've changed and said, no, actually, it's interesting when you look at the stats. As an investor, we should all only be investing in companies that have gender diversity on their management teams, because we know that, the largest study ever done says, so this isn't an opinion, this is actual facts. So one of that shows that you get a 7% higher return. Venture-backed companies have a 7% higher return if they have gender diversity on their management teams. So given that it's such a risky asset class, why wouldn't we do everything we can to mitigate risk? And this is an easy one to say we're only going to invest in companies that have gender diversity on their management teams.
Absolutely, and I believe there's also some amazing stats around the value at IPO as well for female-founded and gender-diverse teams.
Yeah, well, the Babson College study, I think, is the one that you're referring to. There's statistics across the board that say it absolutely makes economic sense to invest in gender-diverse teams. And that's one of the reasons we set Scale Up, because we think there's a huge economic opportunity in the market for investors to make tremendous returns, because we're tapping into an untapped pool of talent that, for one reason or other, whether that be unconscious bias, whether that be fear around the confidence of pitching, that others just for some reason haven't invested in. And we're starting to see a number of male venture capitalists and angel investors come to us to say, actually, can you show us your deals, because we're not seeing the women. So that's a really interesting development over the last probably 12 to 18 months.
Fantastic.
And I would say, from my point of view, I'm obviously sitting on the other side of the desk. So I've only pitched as being female. I don't know what it's like to be male. And I've met some great girls here that are looking to pitch as well. And I just said to them, kind of forget about the stats, because I don't think you would take a meeting unless you were interested in someone. So that's what you need to concentrate on. I actually pitched both times quite pregnant. So not only was I female, which, if you look at the stats, would discount me, but I was heavily pregnant, and I would often say, I'd go into a room, and I'm sure they've had that conversation this morning about me being pregnant behind my back, and then they were going to have another conversation about me being pregnant behind my back after I left. And there was almost nothing I can do about it. So I just sort of looked at it as, you're meeting me because you're interested, and you're going to have to get over the fact that I'm pregnant. And when I said to one of our lead investors, ask me whatever, because I need to prove to you that it's not going to be a problem that I'm pregnant, he said, how old are you? I was like, and then the funny thing that transpired was that he's actually a month younger than I am. And I'm like, okay, great. So now you've asked your question, and I feel really bad about myself because I'm asking someone younger than I am for money to fund my business. So I sort of had to forget about all the hang-ups. And what I did through pitching, my first pitch was terrible. Our first pitch deck was horrible. But I got really good at looking people in the eye and understanding what they were interested in, in regard to our business. So my sister did the first pitch with me, and she did the last pitch, and at the end of it, she was like, who are you? And I was just like, well, I've done it so many times. And I'd actually only pitched to men. There was one female in one meeting, and I think they sort of brought her in so I felt a bit more comfortable being pregnant. So for me, it's completely different. I've only, and it's a female kind of run business as well. So, you know, the scary thing for me is now, if I ever wanted to do something else, I've got a lot of men that are like, but we don't know what to do with your business if it's not, you know, a female running it. So it's sort of, it's so interesting to me because we get lots of opportunities to talk about this. But yeah, for us, it was just more like people only met with us if they were interested, and then they probably had all this other information they had to deal with before they spoke with us, that I just sort of forgot about that, and it was more about refining my pitch as I went along.
So in terms of investor readiness then, in some ways, really what you're talking about is this iterative process. It's almost like taking the concept of an MVP, which is like, you know, the standard kind of thinking around a startup, but applying it on a micro level to a pitch.
Exactly.
And iterating that, and just constant practice from your perspective in terms of investor readiness.
And can I say one more thing? It's about being comfortable. So my first pitch was to a group of really high net worth individuals, and they came to our really crappy office, and so I bought them like choc chip cookies. Like, I can't cook to save myself, but I went to this cafe and I took my English bulldog because he's such an icebreaker. So I dealt with it how I would. So I didn't want to meet them in their fancy boardroom. I wanted them to come to the office, and so I felt in control of the situation. So it's making yourself, feel comfortable.
Home advantage.
Yeah.
And
crappy little desk.
We love crappy offices, by the way. It's kind of a concern if they have nicer offices.
Exactly. Ours is really
Where's
crappy.
the money going now?
So in terms of investor readiness from your perspective, Laura, and Melissa, we'll start with you, Laura. Where do you think the investment in time and energy needs to go? Even because obviously by the time they get to you, they're already pitching. So what do you think are the things that the other pieces of the ecosystem could contribute to ensure that once they knock on your door, that they're ready in some sense?
Yeah, good question. Of course, we've heard a lot of people talking about identifying a problem that people want to be solved and are happy to pay for you to solve, because of course any business is about making money, so that's a fundamental place to start. But people rarely talk about some of the softer and more intuitive skills that investors look for. You know, we absolutely look for someone that has the emotional, intellectual and physical resilience to go through that entrepreneurial journey, because you are going to have a lot of people say no to you, whether that's potential customers or investors. You're going to have to pivot your business model to get that product market fit better. And you know, talking to a lot of people today, everyone is working 7 days a week when they're an entrepreneur, and you've got to look after yourself and have that physical resilience to see it through. The other thing, I think, really is to really empathise with the investors that you're speaking to. Obviously, you know a lot about yourself and your business, and the investors, this may be the first time they've met you. And so there's a huge asymmetry of information at the first few pitches. And so you're looking for an investor to part with their hard-earned cash, and it's a very illiquid investment. It might be 5, 6, 7 years before they get a return, or they may lose all of that money. And so trust is the other really important thing. You know, you're going to have to share a lot of highly confidential information about your business and take that leap of faith around who your right partner is in going through that journey. So those are the things that we as a group of angel investors will look for.
Yeah, I would say, I mean, you can learn a lot about this online, right? What your pitch deck should contain. But there's some things that you just don't have control over, whether you have or not. And one is the team, which is so important. And if you're not a founder who comes from the industry where you're raising money, or you've, exited 3 companies already, that'll put you at a disadvantage over ones that have done that. So what I did when I was raising money, because it was the first time I was raising money in 96 in Silicon Valley from venture capitalists, I got a really good advisory board who had all the skills I didn't have. So when they were looking at the team, that's what I was highlighting. And the same thing, what if you don't have customers yet? You can't control that. But maybe you've got a bunch of them that have signed up to be on your customer advisory board. I've noticed companies doing this, and it's really actually quite impressive. Companies that don't have customers yet, but they've got the CMO of OzPost who's on their advisory board. And then you know that they are, not really, I don't know if that person's here right now, but somebody had a worried look on their face. But so you know that they're it shows that they can go convince the types of people that they're going to need to convince to grow their company to join in the journey, and that they're good salespeople. And as an entrepreneur, that's probably the most important skill.
Yeah. And then in terms of from the flip side, so from an entrepreneur's perspective, when you're going out to choose an investor, it's not about just going out there and going, cool, hand me some money, I don't care who I get it from. There's actually some real strategic thinking that you need to put into who is going to be best for my business. What are some of the things, Sarah, that you thought about strategically in terms of going after the money?
It's interesting. I have to like people. So we did one pitch where I walked into a boardroom and no one said hello, and I was pregnant. Just ask me how I'm feeling, and I'm in high heels. So blah blah blah. But yeah, I have to like who I'm working with, and I have to understand that they see the vision for the company as well and what value they're going to add. I found out after those 2 rounds of fundraising that you should, and this is a direct quote from Lisa Messenger, you've got to meet someone as an equal. So I know that the money is really hard earned, but also as an entrepreneur, you've put your life on hold and you've put a huge amount of money and time and resources into that. And I think you can't forget about that. So you can't think, $6 million. You can't be like, oh my God, that's worth more than I am, because they're investing in you. You have to show that you're worth it, which obviously takes a bit of time. But you need to know that you can really trust them as well. So trust is really huge for me. It's huge within Bellabox as well. And what value are they going to add? So they should tell you that. And that's hard to ask, because you're money's scary. If you're sitting there I'm earning $20,000 this year and not anything, but I want you to pay this much money into the company. It's really scary to ask that. But again, the more you ask it and you find better ways to say, well, what do you want to do with the company? Why is this of interest to you? And I think money goes, unfortunately, when you're growing and you're funding that growth. So I think it's really important to understand what value they add and why they want to invest in you. And that's not an arrogant thing. It's about understanding what they see in you so that you can keep pushing that and adding value to the company.
And Laura, your thoughts?
Well, I think I answered the question to start with, but that alignment of interest is really important. At the end of the day, investing is a people business. Yeah. People start from a position where it's a financial services business, but we are investing in you and your ability to execute on your vision and attract other people to that, be that customers or team, and so constant communication around what the end goal is, and I think we might go on to talk about exit later, is just fundamentally important.
Yeah. Okay, so I'm going to tell you a secret. Write this down. But the best thing that you can say in a pitch when an investor asks you, what's your valuation expectations? Say, we're really not so concerned about valuation. We're mostly concerned about getting the right partner on board. And that's how you'll get the highest valuation. And it's just, as an investor, and I've been on both sides, and I remember it was actually a woman, probably the only venture capitalist woman at the time in Silicon Valley, who said to me, when I was asking about valuation, she said, Melissa, you shouldn't really worry about valuation. You should worry about getting the right investor on board. And I went, oh my God, she must think I'm so stupid. Does she think I, just was born yesterday? But it's so true that because you're really, when you're raising seed or Series A, you're hopefully going to build a huge company, and the valuation that matters is the end one. So it's really about getting the right investor on board. But so when you're coming in, of course, every entrepreneur has that concern, but I would just not even talk about it. Talk about how you're going to build the business together.
And in terms of, I guess some of what's been talked about today is, do we try and force, do we create, or as Ahmed had said at the beginning of the day, we didn't create KPIs around this stuff. And I've seen some interesting stuff come out more recently from the startup space. I know that Innovation Bay, for instance, who are running a pitch night, I think in kind of mid-May, have specifically earmarked one position that absolutely will go to a woman.
Yeah, for all of their events, which is
amazing. How important do you think, and obviously your entire business model is specifically for women, there was a Crunchbase article that talked about there being no evidence that by having more female investors that there would necessarily be, more investment in females. But then there was also something else that suggested that a woman founder was twice as likely to have a female investor. So neither of those two things add up in my mind. But how important do you think it is in getting the balance right on both ends? So i.e. Creating a safe space for women to go and find their way through from a finance perspective, but then also to have people on the other end, I guess, setting an example and showing, hey, I'm pitching to someone like me. That's where I could be when I exit my startup and become an investor myself.
I mean, there are some great groups like Head Over Heels, like Springboard, that are really helping to equip entrepreneurs to be pitch ready and ask all the right questions and really understand what the right partner is for them. And what we're really trying to do is to make sure that there's a number of investors who are really informed about the risks of investing in startups. And a lot of scale angel investors are entrepreneurs who, like Melissa, have grown their business, sold their business, and can really empathize with the entrepreneurs. And I think the Crunchbase article you're referring to, I was just talking to Bruce earlier, there's been a lot of focus around in corporate boards, having one woman on the board doesn't really move the dial. And what that article said was venture firms with one woman involved in the partnership didn't really change the percentage that invested in women, but where there were two or more, it really did shift the dial. And so bear that in mind with the groups that you're looking to pitch to, I guess.
It's really hard to believe that, because I just know as an angel investor, I think it's maybe 25% of the companies I've invested in are run by women. So that's really high when you think of the percentage of companies that get funding that are run by women. And I didn't start out with a goal at all to do that, but it was just the best companies and the best people that I found happened to fit in there. And probably in terms of the companies that would have pitched to me, it would be much lower than 25%. So I think I think we need more women investors to get more women funded. That is, I absolutely believe that's the case. And I just read something that Laura sent to the panel that said, an analysis that I think it was TechCrunch did, that said 7% of venture capitalist partners, these are partners that are actually investing, are women. Now, they did a survey for the top 100 firms. And that sounds like a really dismal statistic. But I remember the last time I looked at that closely was when I had just become a partner in 2001, and it was like 1.5% were women. So it's really increased quite a bit. There's a long ways to go. And I don't know if you followed it, but when was it Ellen Powell who sued Kleiner Perkins, which is one of the top venture funds, most well-known venture funds for sex discrimination. And she lost the case, but it shed a light on the industry, which was great. And a lot of firms started scrambling to find women. So I think it's changing, and we have to keep that light shining. When we started Heads Over Heels, this topic wasn't talked about a lot. And then, thanks to Sheryl Sandberg, it really has been. And we're in a really unique time right now because everybody's interested in it. I know our last few sponsors for Heads Over Heels, they came to us and said, we want to sponsor you. And I know part of it, they believe in what we're doing, but it really didn't even make strategic sense. They're not involved in the startup arena, but there's a lot of companies that are really looking to do something here. So we need to make hay while the sun shines, because right now this is a really popular topic, and it's not always going to be. It might decline in a few years, so hopefully we can really change these numbers while the topic is important, and we can keep the topic important.
And I totally echo that. I think, this is a great time to be a female founder. It's a great time to be out there raising money, because it is sometimes you need to be slapped over the face to understand what's going on. And I think, especially in the startup world, we live in a world where there's lots of females doing this. And I was chatting to our CMO about this today, and she's like, it's so funny because we don't work for an Australia Post Excluded, but because we don't work a NAB, a big corporate, we don't really see that. Bellabox is 90% female, and we want more men. So and we talk to a lot of startup businesses, and there's always females involved, so we don't see that. So I just think it's more like Springboard is a great example, Scale is amazing. I think it's really a good time to make sure you're out there pitching and get that confidence to understand what you need to do to pitch. Because I think if I'd have gone to a pitch night when we were pitching Bellabox and I had to stand up at that lectern and pitch Bellabox to a room full of people, I don't think I would have been able to make a noise. I would have been so nervous and I wouldn't have been able to do it. So you've got to start yourself kind of slowly, and even if it's meeting one-on-one with someone like you or you, and then being able to have a coffee and say, this is what I'm thinking, you'll get a lot of tips, and that's sort of, it's like a confidence journey, and then you'll be able to stand up at that lectern and pitch to a big group.
Excellent advice. Are we okay for time? Do we want to move to questions? Excellent. All right. So question time. Yes, we have our first taker over here.
Thanks very much. Great presentation, ladies. This sounds like a very simple question, but I just want to pick up on what you said, Melissa. So how do we get more women investors rather than women entrepreneurs?
Yes, we need it.
Pay them lots of money to exit?
No, well, one, we do, because when you think of who are the most active angel investors, it's usually, I mean, we have people in property and that kind of thing, but it's usually people who started a company, had to raise money from angels or venture capitalists, and then exited it, because they love that. And it's a way to stay close to it without having all the stress, and you can sleep at night as opposed to, entrepreneurs. But so we need to get more women succeeding. But I hear women, and I was on the board of the Alliance of Angels in Seattle, which is one of the third most active angel investing forums, and I was usually the only woman at the events, and they wanted more women, and I think they're up to 20% now. And I was really involved with Sydney Angels when they started, and they are dying for more women, and they've got some more now. But they kept saying to me, Melissa, how do we get more women? And a lot of times in the early days when they would start the session, they'd say, "Welcome, gentlemen and Melissa," and this was with a room of 30 or 40 people, and they were saying, how do we get more women? So I'm trying to bring along women, but I realize, the women you're trying to bring along who are the natural angel investors are the ones who built companies and exited them, and they're hard to find. But we're creating more, and we're with Springboard and Heads Over Heels, we're growing more of those. But absent that, or because that takes some time, what Scale's doing is so important in getting women interested in this. I hope there's a day not too long from now when we don't need a Springboard or a Scale or a Heads Over Heels, because it's just all mixed. Because another thing, when you get, and Scale has men in their group as well, which is really important. But when you get networks of just women, they're just learning from the people that don't have the networks, right? So it's really important that we're also networking with men investors, male investors, because they've been the ones who've been doing it for a while. So what I would say is, especially now, if you're interested in it, all of the angel groups, at least that I know of, are dying to have more women. So don't walk into the room and think that because there's only one or two other women there that you're not welcome, because it's just not the case.
And I think the other thing to add is, just as an entrepreneur, when you're first coming in and delivering a pitch, when you're first becoming an angel investor and you're listening to a pitch and trying to decide whether you might want to invest in that or not, there's a lot of our investors say, we have this kind of feeling a little bit sick in our stomach when we're writing our first check, and we know that we might be writing that money off. And so, actually part of what we think is really important is the education and the sharing of experiences between other investors, because, I think as an industry, there's been a lot of smoke and mirrors about it's all really complicated. And I think there is, a lot of power in collaborating around sharing great investments, sharing experiences, and iterating your model. And so a lot of the Scale Angels that perhaps joined us 18 months, 2 years ago have now, and were very nervous when they came to their first session as a listener, not as a presenter, have actually now gone on, not only invested in deals, but led deals, sat on the boards. And actually these women have been entrepreneurs in the past. But it's just getting the confidence to sit the other side of the table is also a bit of a leap of faith.
Yeah, and I mean, you guys have done an amazing job. I remember, I think I was even part of your inaugural pitch round, and at that time I think you only had 20. So to have that be 5 times since then, over the last 4 years, and then to have invested $4 million since that, sorry, not 4 years, but since that launch, and have invested $4 million over that time is just amazing. So, you know, I think it's quite unique in Australia. I'm not sure that there is there another angel investment group that is purely for female founders based here?
No, there's not. But just to put myself in Sarah's shoes, one of the things we're trying to do at the moment is raise a fund so that others can invest alongside, you know, our angel group. And I have to say, pitching that fund is hard because, like any entrepreneur, you know, we don't have a track record of exits yet, and I think in most of the pitches that I've given to superannuation funds or corporate funds or high net worth individuals who are not members of Scale Angels, they've all been men.
Yeah.
And it's hard. It's really hard to share that message. So I can certainly relate to entrepreneurs a lot more.
Questions around this idea of backing the person as much as, or if not more than, the business idea. It's a point that quite a few people have touched on today, and I think it's really interesting. I'd love to know what you think are the most important traits or characteristics that female entrepreneurs can demonstrate in a pitch that really talk to their strengths as individuals, and how much should they skew their pitch towards that, rather than focusing, I guess, purely on the business idea itself.
Something we reflect on at the end of every screening session and every investor forum is how much the entrepreneur has listened to feedback. Because understanding your customer, you're going to have to be receptive to feedback there. So that's a real indicator to us that you're really working hard on product market fit if you're answering questions well and listening to those questions.
I listened to a podcast today with Tim Ferriss, and and I should know this guy's name, CEO of Angel List in the US, Navi, I can't think of his name, but anyway, and he was saying the 3 top things that he looks for in a founder and pitching an idea is integrity, energy, and then desire to do well. So, and he was talking about that, you know, the journey is long and hard, but they often invest in people that may not be successful with their first round, you know, their first business, but then they've got them on side and they're more likely to be successful with their next round. So yeah, it was quite interesting because it wasn't just about the business idea, it's more how are you going to handle it and are you going to follow through with it and are you a trustworthy individual?
My question has to do more with the investor side of the picture, right? So there is a fair amount of research showing that investors evaluate the ideas that women pitch in a different way from how they evaluate the idea that men might pitch to them. So from your point of view, what kind of things could investors change in the way they evaluate, you know, women and men's ideas to avoid stereotyping and prejudice and, you know, unconscious bias to play out in the process?
First thing is just being aware that it exists, this unconscious bias, and knowing that there's different styles of pitching, and just reminding, you know, for me it's reminding myself that these successful companies run by people that didn't fit that stereotype. And then just the more that people are pitched to by women, the more it just becomes, you know, the more it becomes standard. So one of the things that I would encourage all investors to do, and it's really happening now it's happening at City Angels, it's happening with Innovation Bay, I mean, it is what Scale's doing, is they're trying to make sure that they're presenting women. And so, I mean, Innovation Bay, with having one of their 4 spots always reserved for a woman, is great. It's sad that we have to do that, but at least it will become the norm now. Heads Over Heels are women, are founders. So Heads Over Heels is a group that supports women entrepreneurs running companies with high growth potential, and the way they support them is by plugging them into a network. So I don't know if that was talked about earlier, but it's getting very efficient on who you need to be connected to. And our founders have raised over $21 million from our connectors, from our members. And we're not even an investment group. So it just goes to the old adage that, you know, if you want money, ask for advice, and if you want advice, ask for money. But what happened is, you know, we have really, our connectors are people who are passionate about entrepreneurs. A lot of them have the means, and they get exposed to these great companies, so they invest in them.
I think just one final point to that unconscious bias question. Google had shown that when they sent an email out, so they had problems with people applying and not enough women applying for computer science roles in the organisation, and when they just simply sent out an email saying, there is this thing called unconscious bias, and now we're making you conscious of it, that was enough to change the statistic. So I think that's just something to be aware of. And I think we're all out of questions now, aren't we? So thank you very much, ladies, for your time. Sarah, Melissa and Laura.
Thank you.